Hello, folks. Hello, hello. Really from all over the world. Just want to say welcome. Glad to have you here, and I hope that you enjoy today. Definitely want you to know going into it that I am happy to hang around and answer any questions. If you want to share, anything, ultimately we want to treat this like a community, just kind of have some fun, and we'll try our best to get you out some what we believe to be pertinent information, but we're going to kind of step forward into what we've been talking about in our previous presentations. And before we get started with all of that, folks, we have to go through the disclaimer, of course. I just want to make it very clear. Please take it, take your time, read through it in its entirety. Very important, of course. Notable that this is for educational purposes only, and I believe we're all firmly aware of this. Hopefully we haven't learned it the hard way, but there are substantial risks involved in trading. So just want to make everyone aware of that before we get started, okay? Like I said, it'll be there. It's on the recording and everything. If you want to go back and review it, if you have any questions about it, please do let us know with everything. Okay, so yeah, it's super amazing to have you all here. Let's do this. There's one thing I want to get started with. We are going to go through, I'm literally just going to kind of scurry through a few slides, if you will, just to give you an introduction as to the, we're really following up, but I want to intro what we're going to be doing today. And we'll, like I said, we'll scurry through it, we'll go very fast, and we'll get straight out to the live charts, and that's where we're going to be spending the majority of the time, okay? All right, very good. So let me switch up the sharing here for just a moment. Let's see here. Sorry, folks. This is going to take me just a moment. Got a few things here to share. So, okay. All right. Very good. So, I'm going to come back to the happy Juneteenth, right? Freedom Day. So, a lot to celebrate, folks, and I just wanted to make mention of that. It's a great day, and so definitely, like I said, happy Juneteenth. So maybe pass that along to others and move on with the celebration and have lots of fun. All right? So, yeah, it's a great day. Okay, so we're going to, let's see if I can now get back out here. There we go. So I'm going to give you, most of you, I would say, are probably new or newish to PFA. So I am going to run through a little bit of the introduction. PFA, of course, is the acronym for Pure Financial Academy, as you probably already imagined there, yeah? So we're simply an online community dedicated to supply and demand trading concepts. We've been providing training materials and software to individuals looking to learn about trading since about 2009, so it has been a long road. It's kind of scary sometimes when you look back over time, right? So we believe in the power of having others there to support you, thus the community. We want to all be on the same path, at least to some degree. And our mission is simply to provide a positive and effective environment for traders and investors who wish to utilize supply-demand trading methods, or really any other methods, given the fact that we take more of a kind of a I don't know what the words I'm trying to look for. It's a philosophy, if you will, right? Top-down approaches and all of that good fun stuff. However, our, if you call it execution method, will be based on supply and demand principles, yes? All right, so we want to do all that as a team. There's our contact information. You probably already have all of that, but it is there. So let's go ahead. As I said, I'm going to move super fast here. I'm not even going to bother to cover the slides because I will reference, however, as a matter of fact, let me go ahead, excuse me, folks. Let me go ahead and get you to that slide here, okay? I really am not sure, and I apologize for this in advance. I don't know if it's clickable, the link I mean there. I don't know if it is clickable in the room or not. Sometimes it's different. So let me try to do this really quick. I'm going to get you the direct link, and I'm going to post it in the chat. And the reason I'm doing that is because this being part 2, that was really part 1. Probably you may have already reviewed it. If you haven't, I would encourage you to go back and do so. We talk about a little bit more of the basics and go through each of the patterns and so on and so forth. And we recently did an event where we covered the slides you're about to see, where we took it a little bit further, right? So don't worry about that. We're definitely not going to go ahead and do that again. We are going to get out to the charts, as I said. Now it's time to take it. We're going to call this part 2, right? But we'll call it, how do you say, the second part of part 2, right? All right, very good. Chat link works. Thank you so much. I appreciate that. And feel free to ask questions along throughout. So given that we're not on a time restriction here, you can really ask questions as you like. I'll do my best, right? But as I'm trying to focus on the right chart, it's kind of hard for me to get to all of the questions. That being said, if I miss one, please don't think I'm going to disregard the question. I'll get to it. I just may, miss it because there's a bunch coming in or something like that, and we'll go back to them. So I'll kind of scroll back through and make sure I'm not missing any questions. Okay. All right. Very good. So again, if you want to copy that link, if you want to click it, Casey, I thank you so much. I believe he said that it was working pretty well. If you want to click that link, just so you have that. And if you don't, you can always go back to in the chat, or if you need to, we can provide that to you at any time. Okay. So again, supply-demand imbalances part 2. This is what we had previously discussed. The patterns, right? So these were the supply-demand patterns that we looked at. And again, folks, I'm not trying to jump, through the slides, so to speak, but I don't want to take up too much of your time. So let me just get through this, and please go back and review the other recording. One thing I don't want to happen is to put the cart before the horse, so to speak. So if you haven't seen any of the previous content, you're jumping in here for the first time, you're gonna be like, whoa, I don't know the slides, I don't know what he's going through. Excuse me, things like that. So don't worry, it will make sense once you go back and review the previous. All right, and thank you for understanding, by the way. Okay, so we talked about, let me just go back. Right, we talked about the patterns, okay, supply-demand patterns, supply on top, demand on the bottom, and so on. We talked about locating the demand at resistance, okay. We gave a couple different resistance versions. Remember, there are many. We're going to go through some of them today. But we predominantly look at the levels as well as the support and resistance lines and so on. When we're looking at demand, though, specifically, we're looking at the resistance, not support. It's very important. That's a distinction that needs to be made there. Okay. So we talked about locating supply at support. Just a moment ago, I said demand at resistance, right? So here's that distinction: demand at resistance, supply at support. All right, and we gave a couple of versions of that. Same, just inverted to what we previously discussed, right? So we're still talking about the levels and the lines, though. Okay. All right, and then we introduced a couple tools because we only have 2, right? Well, I suppose we do have more than that, and we're happy to get that to you if you like. We can talk about our PFA tab selector. It's just a convenience tool. It's an amazing one that helps us to navigate through the tabs and so on. And again, we'll look at that in just a little bit if you guys like. But we really focus here on 2 products, right? And before we jump ahead, just understand that the 2 products, think about it as one product, but different versions of the product, right? Or it opens up different functionality within it. So we talked about the order suite, right? Kind of what it was, but essentially it's the means to manage orders, and we're going to do so much with that today. We have taken this thing to a whole different level. Understand that everything that we've ever done with our software is out of necessity, never out of, hey, let's make this for sales. Okay, I always try to throw that out there because I think it's important to understand. But luckily we have a wonderful community, and it helps us to continue development, right? So I mean, your payments and things like that, we appreciate it. It really does help us to continue the ongoing functionality developments and things. So yeah, so thank you for that. All right, so that's going to be called the PFAOrderSuite. Again, we will be looking at this in just a moment, but let's do it on the live chart, okay? Next, and we said there were 2 products. This is the PFAZoneSuite, right? So remember, this is the additional functionality. The Order Suite is focused on the order management. The Zone Suite encompasses the order management and then takes it to a different level as it just adds all these, all this other functionality, such as to say the automated supply-demand zones, volume profile, order flow analysis, bunch of tools that we'll look at when we get out to the chart as well. So it just really depends, this is where I was saying earlier, we we focus, on our execution and analysis and so on in regards to supply and demand, right? But it doesn't mean everyone will. So the order suite, I would say, and I'm just throwing this out there, is applicable to essentially the entire NinjaTrader ecosystem. Anyone using the NinjaTrader platform, by that I mean the ecosystem, if you will. So the users of NinjaTrader 8 platform, that would be applicable to everyone, because everyone needs to manage orders, right? We need to submit them and make all kind of changes and everything, but we want it to be convenient. Well, at least I do. We want it to be convenient and very efficient. So that's why we built that tool, because we needed it, and there were additional things that no one's ever done before, that we wanted to do because we needed it. That's what we do, and such as hedging from same market and so on and so forth. Again, we'll talk about that in a moment. So that's the ZoneSuite, folks, both NinjaTrader 8 compatible. All right. We gave some examples here. We were talking about the order menu. Let's just go out to the live charts. Same thing here. User interface to submit and cancel and reset and all that good fun stuff to the orders. Here we talked about a multitude of features, and there's a lot. I mean, there really is a lot. This is that ZoneSuite, right? So this is some of the other features that are built in just outside of the order management. You have the zones, you got all of these, fancy things that we may or may not even know what they are. The altitude grid, it measures perceived value. Most of us are going to know what the rest of it is. Market structure, volume profile, trend lines. Continuations, most of us should know what that is. If you don't, happy to answer any questions that you have. But all of this is built in, and let's just say the reasoning behind all of this. Let me backtrack. Do we use all of this? Okay, sure. Do we use it every day? No, absolutely not. Right? We don't. And so you might be thinking, well, you built it out of necessity. Why'd you put those tools in there if you don't use them every day? And the simple answer is for automation purposes, right? So everything we do, the idea, kind of the purpose in software, right, is to make it automated, to get to a point where we can have decisions without subjectivity, or rather make educated decisions. So that's the purpose. I would say especially things like your market structure, right? Things like your trend lines. I mean, all of this, everything, all the way down to the zones and so on, it's a means to help me not go crazy. Okay, I don't want to go crazy, folks. So yeah, so what we're going to do, I'm joking, of course, with the emotional, it takes a lot of emotional stability, though, as we all know when we're trading, right? So I mean, it's very difficult and challenging to submit a trade, and then sit there and watch it. Maybe it goes against you, or we all have losing trades, right? Probably a lot of them, at least a lot more than we would like. But the idea is to be able to look back and say, well, I did what I was supposed to do. So then it's about proof of concept, right? So it either works or it doesn't. And we always say seeing is believing. So that's what we try to get people to do. Just kind of sit back and watch, and let's do it together. All right, so we're going to focus on those. I do want to just go through a little bit of this, because we're going to talk a lot about this as we go into the presentation. But as I said, I am going to go even fast on these slides as well. So just understand here what we're doing is these are automated supply demand zones. Okay, so this is going to be the ZoneSuite, of course, doing everything you see. We'll look at these in the live chart in just a moment, if you like. I'm happy to do that. So when we did the presentation previously, this was happening kind of right then, right? On that day, we were like, okay, we need to get the presentation built and put some content over there, what have you. Well, this was happening that same day. It was a little bit ahead of this, of course, but it was towards the end of that day, and I was like, oh, great, let's use the information from today. So that's what we did. This is a supply imbalance, okay, and then you have a demand, let's just call it a supply zone, and then you have a demand zone. The demand happens to exceed the supply. What that's saying to us is the buyers are stronger, at least temporarily, than the sellers. And we know that because they removed the sellers, right? In other words, went through them, violated them. That is important information in what we do, because we can never be, this is obviously an exaggeration, but we simply cannot be perfect. And the idea is never, I know none of us attempt to do that most likely, but we certainly want to be as good as we can, right? And the way for us, in our opinion, to do that is to have the best information that we can. So if we can determine that the buyers at this particular area happen to be stronger than the sellers, that just becomes a strategic advantage. So if I'm going to bet on something, let's say, although trading is not betting and gambling, you know, to be clear, it's strategic. But if I am going to bet on something, I want to have that strategic advantage, right? And I always say this, you know how what is it, like Texas Hold'em or whatnot, they do these tournaments, or whatever you call them. I'm not a card, you know, player myself, so I don't really know. But the tournaments and the championships and all that, do you find it ironic how or I do, the same people end up there? How is that possible? It's because they know strategy. They're not just playing the game. They're not just betting or, you know, whatever, again, the cards they're dealt and so on and so forth. They're playing their opponents. It's a whole strategy. It's pretty amazing. So anyway, same kind of concept here, okay? So we want to focus on that quote-unquote, you know, advantage or potential advantages that we have. And yeah, so we try to give that a shot. All right? All right. Yeah, Nilesh, that's exactly what we're going to do. Yeah, no worries. You're going to see everything on the live charts in just a moment. Almost there. I appreciate your patience. So again, remember, there are a lot of new people who haven't seen this stuff, so I just wanted to kind of show them real quick. But thank you, and absolutely, that's what we're doing, or going to do, sorry. Okay, so here's that example that I was previously showing. When we have that demand exceeding supply, we then have information. So if I'm looking to buy the market, now this is important. If I'm buying the market, it has to be at the right appropriate time. In other words, I need to be in the right location. So if I'm in the right location and I've deemed the buy side of the market, that's what we're looking for on that particular day, this is the picture I'm going to go look for, okay? Hoping for that outcome, of course. Demand exceeding supply and all that, right? So then here we have a second one. You get the idea. We're just continuing with this demand exceeding supply. You can see we get a retest into the demand in and of itself, and then again, we're hoping for that outcome. All right? And this was the last one. This was actually happening at the time. I think we had just concluded it when we started the content on that day. So you're going to, just the same thing here, demand imbalance. We have supply exceeding demand. We do use market orders for our entries, which is a pretty cool concept. Don't let me forget about this. I'm going to talk about this in the software. This is built in. We can actually differentiate market and limit orders, not only just for the entry, but we can do, we could say, for hypothetical, we could do a market order on the entry, and then a limit order for the targets, and then a market order for the stop. So just to throw that out there, that's the way it comes in the template. That's the way that I use it. I would encourage you to, make changes to that accordingly. All right, very good. So then, of course, target, opposing, demand. We'll talk about the strategy of it and all that. And it just kind of walks through, and you can see we're expecting a bounce from demand. Okay? All right, so let's do that. Here we are today. This was the follow-up event that we said we were going to do. And again, we're happy to have you here. We will come back to this. As a matter of fact, yeah, let's do that towards the end of the presentation. But I will go ahead and give it to you, I suppose. So Ninja, the discount code there, this will be the previous event that we did, there's some discounts. They're pretty hefty, and they're going to be ending, I believe, at the end of today. So if you want to just copy that code there, Ninja, it's pretty simple, right? All right, but those are the pricing. And those are things. I'll let you go back through the recording if you want to get the details of this. I don't want to spend too much time on this. I'd rather just get out to the charts. Okay? All right, very good. So there are those. Now let's get out to the live charts. I know that's what you're waiting for. Let's see if I can find them. Here we go. And yes, and then apply auto share new items. Very good. Okay, so now you should have up my my 3 charts here. Okay. Oh, Nilesh, I hope I'm not mispronouncing your name, by the way. Or Nilesh, I'm so sorry. But, okay, good. All right, good. I got it right. Whew. That's a relief. Thank you. Yeah, I appreciate you smiling. Nice. Oh, yeah, absolutely, Casey. That's very nice of you to say, by the way. Just saying thank you for doing the event and offering the discounts. No, of course. I mean, look, at the end of the day, I never pretend otherwise. Any purchases that are made regarding the software of the community, they obviously help the community. So, I'm happy to do it. Absolutely. Even without that, if you get to know me at all, I'm happy to do it anyway. I do enjoy this. Been, like I said, doing it from for a very long time now. And even before that, I was an educational director in a prior career. Oh, that was so long ago. So I don't know why. I don't know how or why. I've always kind of done whatever it is that I'm doing. I do it and then somehow end up, educating on it as well. And so it's just a passion. I don't know why, or again, I don't know how. It's not like I have that per se in my. It's not like any of my family or anything's ever done it. So maybe I just got lucky and found something that I'm passionate about. So let's get started with it. Okay, where to start? Well, if you've been on social media, for example, you've probably seen a lot of what we're going to try our best to keep the content, to keep you updated, all of this good fun stuff. We always are looking forward, right? And I don't even think I need to say this, but it kind of goes without saying, we can't do anything from hindsight. So we're always looking forward. We're projecting, I think, is probably the best way that I can say that, or attempting to make forward-looking projections. In fact, I'll show you this one right here. I don't change things on my chart, as you all know. So I know that there's a lot of you, well, there's a lot of names here to look through. Yeah, so I do see some names, right, that that are in our daily training, okay? So that's great to have you all here, but they can contest it. So I don't change things. For example, the draw objects and so on, what we do is we put them on the chart as, so that we can reference it, right? So here's our process. We'll go through it Tuesday, Wednesday, Thursday of every week, and what we essentially do is we try to go in, do our analysis, look for, setups if they occur during the room, great. If not, if then else conditions and so on. Again, non-subjective. But the idea is going back earlier in this presentation where I said seeing is believing, there it is, right? So that's it. We need to be able to build our confidence, myself included. Remember, I'm trying to always maintain my level of confidence. I've never lost it. The reason for that is because we talk about how our governing dynamics are ever-changing, evolving, etc. So what you're going to see, matter of fact, I'll put out something about this, I think, pretty soon. Keep up on social media if you want. And you'll see the differences in volatility. It is astonishing. Go back 10 years and see what you get, right? So if we're trying to do the same thing today we were trying to do 10 years ago, not going to be so good probably, okay? Well, for short term, like kind of trading, if you will. Investing, yeah, I mean, of course, that's great. But just in general, I mean, the volatility of the market is so very different today. So one thing that you'll see, I believe this is on social media, is this particular trade right here. And we talked about carrying it into, well, basically fingers crossed, right? There's that. So we'll see. I mean, it's there. We'll see what happens to it. But let's talk about the tool. I don't want to focus on the trade so much. Let's talk about the tool that helped us do that, because here's a feature of the tool, and I'd like to make that very clear. What happens in a situation like this right now? I have a naked order, right? And I'm sure that you all know what a naked order is, but if you don't, what I'm stating here is a naked order would be an order that is sitting on the exchange, could be the CME, could be the CBOT, New York Stock Exchange, etc., wherever you're trading, or whatever you're trading. So the order is sitting on the exchange with no protection, no stop, no target or targets, okay, nothing. Which means that effectively, most especially in a long position, I could be in very big trouble, depending on the market, of course, that I'm trading. But let's hypothetically say over the weekend something really bad happens. We hope that never does, but of course we all know that it does. But over the weekend, let's say something bad happens, right? Well, that position, in this case, it's short, so it would be a, potentially a good thing. But let's say that that's a long position. As you know, price could crash over the weekend, and not only could we lose our account, okay, we could lose more than our account. So what the broker is going to do, how they're going to manage that situation, if we were to open up, okay, just hypothetically, if we were to, this is a complete exaggeration, But if we were to open up way down here, perhaps I wipe out my entire account and owe the broker money because they're going to have an immediate margin call. They're going to close out my account, and then they're going to give me this really fun phone call that says, hey, you need to pay us. And not only do you need to pay us, you need to wire it and get it done quickly. Uh-oh, right? So wait a minute. You're telling me I just lost all the funds that I had in my account plus more? Exactly. So it can be, that's dangerous, right? That's dangerous. So especially if we're going into a weekend position, you know, it's ideal to already have that attached bracket order, okay? And yeah, so that's just something that I wanted to mention. Let's look at the tool and how we can approach this, however. So first and foremost, there are two methods that we can use in the order management. And so let me do this real quick. All right, look at this. So at the top, what I want you to do is from the line here that I'm drawing to the left. So those two rectangles here, as far as that little, you know, trend-looking icon, remove that from your thought process for just a moment. In other words, if we're using the order suite alone, I'm going to have these four icons right here. Really, these three, and then that fourth one can just hide. You know, it can essentially just kind of hide the menu to clean up the chart if we desire that. All right. But you know, ultimately, we're going to have these three. And if I go into my user inputs menu, which I'm going to left click here and I'm going to open it up, it's again user inputs. If I go to my order inputs over here, remember earlier I referenced the market orders versus limits. So you can see here in the entry we can specify as well as in the stop as well as the targets. So we can actually use different ones. And as I mentioned, I like to use, I'm not advocating for this, this is very important. The reason that I use market orders on the entry is because I predominantly trade almost exclusively the S&P 500 futures contract. Therefore, I feel comfortable with doing that. I hardly ever get, you know, any major slippage other than, you know, a couple ticks or something like that, which is not of concern for me. It's a personal preference. If that's an issue, I would strongly, you know, maybe encourage you to think otherwise. You might want to change that to limit. Okay, but again, you know, if you ever have questions about it, just let me know, and I know that you probably already know all of this anyway. So we have that, right? Market and limit orders, etc. A lot of bells and whistles here. But what I wanted to focus on right now is this setting right here. Submit order as, or orders, right? Submit orders as. Now we have two options there, trigger lines as well as default. And for template purposes as well as video purposes and training and all that good fun stuff, I found it best to just put all the same settings except for one. Trigger line, so in my primary, which is going to be this first menu up here in the top left, and then down here we have all the same identical settings except they are pertaining to this menu, the secondary and or the one on the right. Okay, so we have the primary and the secondary menus. Now if you notice on the secondary menu, I have not opted for trigger lines. In fact, I opted for default. Okay, so the reason that I do that is because I like to be able to make my own determination whenever I'm going to submit a trade. For example, am I going to go into the weekend? Is this an overnight trade? You know, things to that extent. If so, then I may opt to use the secondary menu. Why? Because that is going to use the default method, which means submit the orders to the exchange. Okay. Just as you know, your standard method in NinjaTrader, such as their chart trader, how they submit orders, kind of the same principle. Okay, so if I go and I try to attach, you know, the orders, right? So you can see, don't do that, Will. I tried to submit it above the price value. So you see what I'm saying, though? It's a general order, very standard order of sorts. Now let me go to the primary and let me do that again. Okay. So I'm going to attach the OCO there, except for when I submit, note that I still have those labels on the chart, right? So the difference is vast, but let's explain what it is. This order here is what we, again, refer to as the trigger line, which means that it's not actually going to be executed until it is triggered and or touched. What's the benefit of that, you might ask? So I would say the predominant benefit there is more along the lines of short-term trading. Okay, so how many of us, I should put a poll up in the room, I bet you we would probably all raise our hands, right? But so how many of you have been through the instance where you have your stop? Let's say for all intents and purposes I'm trading this supply level here.
Order submitted.
Okay.
Order filled.
Of course it's going to reject my order. That's okay. But Now I'm going to have to go back and redo all of that, folks. But anyway, mistakes are made in real time. So let me go back into the whole situation, though. So let's say that I go in and I sell that order, or the zone, excuse me, and I go through this whole thing here, okay, and then I go to submit those orders, right? Well, what's going to happen is they're not going to be submitted to the exchange, not like the default method. So in a short-term trading situation, like I was saying, how many of us have had our stop right here into place, right? And then we go, for all intents and purposes, maybe right up, we tag our stop. So now we've gone negative, we lost on the trade, if you will. And here's what price does, okay? So price comes up, hits our entry. We're thinking, okay, it might do what we want it to do. It goes up, hits our stop. We're taken out of the position. And then it goes right where we think it's going to go, right? How unfortunate. But it is what it is. So the reason for the, or one of rather, the reason for the trigger lines is the simple fact that they can't see the order on the level 2 data. It doesn't exist there, right? Because again, it's not on the exchange. And therefore, if it's not on the exchange, there's no way for it to be in that level 2 data. So as a short-term trader, it's the ability to essentially hide that order from activity. So no one's going to see it. They call it sweeping stops and such, right? So if I have a stop, but it doesn't technically exist on the exchange, that's kind of what we're doing here. All right? Very good. Okay, so then for all intents and purposes, if I don't like what I've done, I can reset those orders and go back. Some of the functionality here, notice that if I drag this, you see that target moving too. So if I go into the settings, I can show you how we can have up to 3 different targets. And we can specify those to auto-calculate. In this case here, I have it auto-calculating to a 2-to-1. So as you can see here, I have 50 ticks at risk and I have 100 ticks at reward. So I also want to be, again, time efficient, right? So if I go to my other information, hopefully you can see my mouse, I can see the actual currency value of said risk based on the corresponding number of contracts. I can also see the number at potential reward and so on and so forth. From the tool directly, right, so I can move that, manipulate it any way that I want, and I can also increase, decrease the number of contracts right there from the plus and or minus. I can submit them at any time, reset them, as I said. I can take it back if I don't like what I've done. But again, I can submit that order at any time. Additionally, let's say that we're trading equities. Maybe I don't want to increment by 1 or 2. If I want, I can go up and into the settings. We have an increment value, so I can specify that let me say it this way, when I hit the plus button, instead of going up by 1 to 11, 12, and the count goes and so on, I may say, you know what, no, I want to increment by 10. So every time I hit this, it's going to go 20, 30, and so on, okay? All right, very good. So lots of bells and whistles. We try to build everything in to be, again, we call it out of necessity, but we want to be able to do things. So let's go talk about another feature. This is one of the newer features and really, probably one of my favorite. I know probably some of you are dollar cost average traders, let's say, right? So maybe we want to go in and we want to scale into a position, all right? So what we could do is I could go here and I can submit this order. When the order gets filled, actually, you know what, now that I've made that cardinal mistake, which is going to kind of hurt me here because now how am I going to update the what are you going to do, right, folks? What are you going to do? It's all right. So, all joking aside, let's just go place some orders now. At this point, it doesn't really matter, right? I've incidentally closed out the position that I was trying to maintain. But hey, here you go. Let me at least put this out there. I did have a destination of 43.40, so you can kind of see where that is plugged into. And if you go onto the social media recordings and so on, that's what you'll see. But I just wanted to point that out. And yeah, all right, so you got to see that in real time. Don't think we don't make mistakes. Okay, so here's what I want to do, though. Let's just now have, I think we're going to have more fun by doing that. Let's look at it as a positive thing, yeah? What if I don't want a 2-to-1 exactly? What if I don't want it always to be at a 2-to-1? All I have to do is grab the target and or trigger line. You don't see it right now because I have it disabled over there. But if I wanted to, all I have to do is grab the trigger line again or the target and move it. Now watch what happens to the line, okay? Now I've disabled the auto sync and or calculation, and I can go individually move the orders, right, without any, again, it's not auto calculating at this time. So let's go up here and we're going to submit this order, okay? And I'll show you some of the features here as well. All right, so I just want to go ahead and get that filled instantaneously. So remember I was talking about dollar cost averaging. Let's say that I wanted a total of 20 contracts for all intensive purposes, and maybe I wanted my stop to be, again, I'm throwing hypothetical, this is not a, I would definitely not do this, but in a moment we will go through analysis as to what we actually see and project on the market, so don't worry about that. But for all intensive purposes, I'm trying to just throw some hypotheticals, and you know what, let's do it this way. Okay? Remember that I specified in the settings that I wanted my target to be limit orders, right? So if you notice, the menu is now changed, my primary, not secondary, but my primary, because that's where I submitted the orders from. It's now, it looks different. So what I can do is add and or remove from the position. Of course, I could close it out with a push of a button. All standard, you know, for the most part, this close is just very standard. But let's say that I wanted to dollar cost average into that position. Well, I could now add to it, right? So I can add to it, another label will appear, and then I can, you know, add more, however I want to go about doing that. But it's, again, all about the efficiency and time. Okay, so in this case, maybe I want to remove. So let's just remove maybe one contract, right? So if I can get it to do that, the markets are, this is not an ideal time, by the way. The markets, as you know, are, well, they're going to be halted. Okay, so there you go. So it submitted the limit order. Let's see if it'll actually fill it. But I'm removing, as you can see, one contract from the total value, which again was 10. So give it just a moment. We'll see if it can. So when you're working with NinjaTrader's Sim Engine, right, I think it might be based on our settings too, but it really tries to mimic your difficulties in live trading, such as to say limit orders getting filled. That's what's happening right now, because as you can see, it's been touched multiple times. Okay, but it hasn't filled. There you go. It's touching it again. Now, if it goes through it by one tick, that's going to go ahead and fill that order, and I hope it does, because I really I don't want to spend too much time on this, and I'd like to move forward. But I'm essentially just trying to show you how we can add and or remove from the bracket order in and of itself. It will maintain the calculations. So by removing this contract, it will of course account for that, and so on. So we'll just maybe, yeah, I definitely don't want to spend too much time on this. Again, the market's Juneteenth, right? So, you know, celebration, and so people are really kind of away from the market. Let me see if I can just get that to get filled real quick.
Order filled.
Okay, there you go. Right. So what you can see here is that we've now accounted for all of that. And one of the major benefits for me is I need to know. I don't want to spend time worrying about what my actual currency risks are, or my, I don't really care so much about the number of ticks, which is what this is right here, 206, but a lot of people do. So they want to know both currency as well as ticks. Maybe they have a trade plan underway or something to that extent, right? And so it's important to have that information. Additionally, we know if this is a long or short position. In this case, it's a long on the S&P September contract, 44.96, you know, risk and so on, account it. Yeah. All right, so at this point, I could keep removing, okay, or I could add to the position. Note how we have the nomenclature, if you will, add and or remove, and we want to put that there because I kind of need to know what I'm doing, right? So if I go here and I want to add, I can do that, all right? So you're going to need there we go. Yeah, the markets have to move. Again, it's very slow moving right now, so you need the markets to be incrementing. So we've now increased our contracts back to 10. You can see all the risk and everything like that is updated. So, okay, now I can just go close that position and call it a day. So there are a lot of things like this that I can do as far as dollar cost averaging in or averaging out. You know, you kind of name it. There's so many bells and whistles, I think that there's no way for me to get through all of it today. Okay? If we desire to do this from the zones, let's step forward a moment and say, okay, yep, got it. The order management, I mean, we didn't even touch on much of it, as we will. That being said, let's say that I want the rest of the bells and whistles. So we have here the tool, okay, and the zone suite encompasses all of this information here. So we could go here and toggle these both on or off, show only demand, supply. So all this, you've probably seen this before. We've had development of the software for over a decade. We've been doing this a long time. So you've likely seen some of it as we progressed over the years, okay? But one of the things that I want to show here is the order management feature within the zone. So the user interface, CTTF, counter trend, trend following. So if I go here, as you can see, I can toggle directly from the zones, and all that's handled the same way: submit, reset, increment, and so on, right? And what I have in my settings, again, you can specify whatever you like because everyone's a little different, right? But in my settings, I have set the trend following with multiple targets because I'm trying to say if I'm with the direction of the market, or for whatever reason, if I want to take this with multiple profit targets, then just use my trend following, setup, right? And that's just done for me already. But if I say, you know what, no, this is more of an aggressive style trade, or I just want to have one target, I'll go back and just switch over to my CT. Again, counter trend is what the acronym there is. And voila, it's kind of done that fast for me. I don't have to overthink any of that. Once I submit these orders, we'll have additional buttons here, such as to say add, remove, and all of those good fun buttons that you saw previously. All right, so I don't want to spend too much time on that. I know we can also have a lot of fun with just general analysis, but I do want to go into the tools. Let me check one thing here and see if I have, okay, my performance mode is on. So I'm just going to disable that. And as I'm disabling it, what is the performance mode? So the performance mode, which is loads of tools inside of the zone suite, right? So it goes back, my bad, by the way. I just attempted to load a lot of data on a short period of time. But it takes a lot of the tools. If I would have clicked the tool menu moments ago, you would have seen, I think, maybe 3 items, and now you see a plethora of them. So the performance mode, again, just reduces the CPU intensiveness. If we're looking to use the zones, and really the zones only, we don't need all the order flow, volume analysis, etc., then I just disable that, at least temporarily. Then, it's just very fast, okay? But let's say that I want to use it for all intents and purposes. I'm going to go back to the zone menu, and I'm going to click the volume profile analysis. This is stuff that we cover, I believe, as a matter of fact, on the social media. Some of them you'll see where we do discuss this in depth. But what you can do is we can really dive into, so let's talk about what supply demand zones are doing for a moment. They're mitigating risk, right? They're defining a range in which we may or may not be willing to take a position. But it is a means of measuring and identifying the risk to some degree. Now, that's great in and of itself because I'm not just throwing an entry out there at some random location. But what if I want to get even more granular with it? What if I want to literally dive into the actual order flow that's being submitted and or has been executed at said location? That's what you're seeing here. Now, we've had this forever, but by no means at this point in time. Remember, when a tool comes out, it just is what it is, okay? So I do recall once we had this, I believe even NinjaTrader has a version of, as a matter of fact, I think it's, what do they call it? I'm pretty sure, oh, there it is. Yeah, I think it's called their order flow profile, volume profile. So it does something similar. Ours still has a few more bells and whistles, but ultimately, we're by no means saying, hey, this is the only thing that does that. Absolutely not. There's plenty of them these days. We've just been doing it for quite a long time is all. And so we'll look at the benefits of how we use it. I think that's probably the important part, and also more importantly, how it's already built into the tool. So if we open this up, okay, I'm gonna expand on this because you'll see some things changing, right? So if we open that up, notice how now we actually see digits, right? Numerical digits, if you will, or numerical characters. So here we can see the literal number, and we call these tick bins, right? So within this particular area here, I can see 19,660 executed orders. Try to open that up a little bit more. So the text there is dynamic, and you can change the size. If you wanted it to go even larger, you could do that, but I prefer not to because I really don't personally, I don't think that it's extraordinarily valuable. Ultimately, I do like to have the information. just so that I can kind of go back and compare against prior zones and see if there's more volume here or less, etc. But again, when I'm really going through things, I'm not so much looking at the numbers. I'm looking at the specifically the light gray areas or the dark gray areas. Now those can be color-coded. You know, this is just my template. But suffice to say, that's what I'm looking for. A little bell and whistle here. If I extend on that or expand on it, it helps me to identify it a little bit more. So this stays fairly right justified. You can see how all of that works, right? Bells and whistles of the tool, but ultimately, how do we use it? Okay. So as I'm going in here, these areas we call, they're just low profile areas, right? Or excuse, low volume areas. It's where a lack of orders were executed. So what in the world? This is a concept that, you know, was introduced a long time ago, and it was confusing in the very beginning. We had a lot of questions about it because it almost sounded counterproductive, right? But let's go into the logic, because everything that we try to do is just sheer logic. It's based on nothing more, nothing less than we're trying to get a core understanding of the function of the market and order flow. So what tends to happen at supply and or demand levels, right? To identify the level, we need an abundance of order flow and so on. Then we need to go through other processes to have the supply exceed the demand, demand exceed supply, things to that extent, okay? So again, it's all encompassed into one, you know, plan, but focusing on that. So let's say we have identified that there is an abundance of supply here. What happens typically in these areas, note how fast, right? Note how fast price left that area. This is what we refer to as our departure in our training. So the departure is, in my opinion, one of the most important parts of all, because it identifies multiple different components of the supply and the demand imbalance of itself. For example, when price moves extremely fast on the downside, I don't just, yeah, that's great information, but I know two things, either or and or both. For example, I know that on the downside, one of two things happened, right? Number one, the supply was so strong, in other words, the sellers, there were so many of them that they didn't even blink an eye at the buyers, and they defeated them with no hesitation. So let's simplify that. There are a boatload of sellers, right? That's option number one. And I know that to be true. This is never guesswork, because the beautiful thing about price action is it's concluded. I mean, you see it on your chart. It can't be faked or anything like that. So I know option number one is there are a boatload of sellers. Great, love it. That's, you know, constitutes supply and so on. Option number two, there's just a lack of buyers, right? So think about it this way. If we have, for all intents and purposes, I'm going to use some absolutely insane numbers here just to iterate my point, but let's hypothetically say I have 10 million, go big, I got 10 million sellers there, right? And maybe I even have a million sellers, a million buyers back here on the way down. Well, I think we can all agree that 10 million is, you know, it's a lot more than a million, so it shouldn't have any problem defeating it pretty quick, right? Let's take that exact same thought process, though, and let's say I only had, and again, I'm going to use exaggerated numbers here, but I only had 10 sell orders, just 10. So we just went from 10 million to 10, right? Okay? The pendulum swings and all that. So we went from 10 million, and now it's 10 million compared to a million, right? Now let's say that we only have 10 sellers, but back here we only have one seller. You can see how the imbalance is still identifying the same exact thing, i.e. the imbalance in and of itself. So what I really don't care too much about is, again, the numbers, you know. At the end of the day, what I want to see are the sellers substantially defeat the buyers. So that's why that departure is so very important. Now again, it could be a whopping number of order flow, okay, or it could be a very minute number of orders. Either way, the imbalance is the same, right? It's 10%. 90% sellers, defeat, or it's 100% against 10%, you got 90% more sellers, right? So you're going to see the same thing. And that's why I've always tried to say, look, at the end of the day, I don't necessarily care how much volume is there. I care about where the volume is. Where is it at? On the sell side, the buy side, and then show me the imbalance. I'm not going to just try to predict it, but show it to me. Now let's go a step further. What can I do with that information? So once I get that information, as a matter of fact, I love this because we're going to use this exact thing. And then if you go out to social media, I can give you those links here in just a little bit if you like. But if you go out there, you'll see this trade and the one I made that cardinal mistake on. Oh well. But you'll see this. And so if we look at it, you'll see how I set up the trade. Now that I'm explaining, now that we're here in the room, it can be explanatory, right? Much more than some short, like a really short video. But it'll make sense, okay, as to how and why I set that up. But let's talk about that. Why did I do it as I did? So what I'm trying to determine on the departure is as price arrives into the level. Okay, so let's say that I'm going to take my sell position here, which again is what you'll see. The question is, where are the buyers? So on the departure of the supply, where did we go, right? In other words, how far on the downside did we go? And I could keep saying in other words, right? I don't mean to be redundant. I apologize for that. But there's so many different ways I want to phrase it to hope that it resonates with each and every one of us, okay? So on the downside, if the sellers are removing the buyers, and that is factually correct, every tick you go on the downside, you're removing buyers, removing buyers, removing buyers. You're also removing the sellers, but you could also be adding to the sell side at the same time, whereas you cannot on the buy side. So every tick you go down, you just remove the prior buyers from that particular price value. And we went all the way down to here before returning to that area of abundant sell orders, okay? So what I now know, that departure, remember, let's go back a little bit. The departure in and of itself had a lot of things to prove. It showed me that the sellers exceed the buyers. Now, I haven't turned on all of that. We haven't looked at the automation as far as actually seeing the orders and the supply demand exceed one another in the zones. I'll show you that in a moment. But I'm trying to give you a little bit of the methodology, if you will, or I'm trying to go a few steps forward here, give you as much information as I possibly can in a short period of time. So on the downside, sellers exceed the buyers until they don't, right? So ultimately, you know, we kind of came back up here as well. But that's not enough information at this time. I need to see them remove the buyers, which again, we'll go back and look at that in just a moment. Once they've done that and my supply has met all of the automated criteria, okay, and that's important, so that's why having the tool there to do it for me, I don't have to go back and be like, well, should I or would I or maybe or no, yes or no. Yeah, automation is kind of critical in that component. So as we return back up here, I know from the departure, number one, how significant the sellers were. And I know that by the speed and distance that they diminished the buyers, so to speak. Once I get that information, I know another piece of information. I know where the buyers are. Uh-oh, here we go. What have I just done? So I know where the sellers are, and I know where the sellers were incapable of continuing, of defeating the buyers, right? So from this particular area here, we declined to said point. And once we got there, we couldn't go any further. So now for a fact, I know that at this exact price point and or lower, buyers are down there. And it makes sense because if we scroll back, right, you see where the buyers previously stepped in and so on. But that's information that's critical to my further execution strategy because I don't want to fight them, right? If I'm going to sell the market, the idea is to sell in an area where I believe the sellers are going to easily control it. If I don't have that information, I don't know where to put my trigger lines, where to put my targets, and so on, okay? So what you'll see, and what I did, was execute the order up here, and then on the way down, I used this as my protective trigger line, right? I know where the buyers pushed price back up, so how am I, or who am I to try to predict that they're not going to do it again? In fact, they did. Okay, so let's look at what happened right there. Price removes the buyers, returns to supply, right? And if you notice, where are we turning from? You see this low volume area right here? It's very important, okay? And I'll step back into that. This whole kind of conversation is going to be circling back to that, okay? But it turns from that area, and then on the way down, remember what I just said, I also want to know where the buyers might be. Okay, this is important because I don't know where they are. I never try to predict it. None of us do, I'm sure. But again, that strategic advantage. So if I go down, who am I to say, again, that they're not going to be there again? I don't know that, but I can hope for it. You know, I think we all probably submit a little bit of hope in every trade that we place. So on that way down, I say to myself, no, I'm not going to try to predict anything, but I'm going to hope that we can defeat whomever the remaining buyers are there, and maybe we can go lower. Okay, a lot of information goes into that, folks. Remember, it's all about location. I would never be selling the market here without the other information. The analysis is the most important part. So again, social media, we put a lot about this out there. We got VIX spikes, we got all kind of stuff. There's a lot of information, and we'll get to that too if you like. But ultimately, we deemed this an absolute sellable area. Happy to do so. We talked about it in our room a week, well, now it would be more, but it was a week in advance as it was happening. And we talked about it specifically, explicitly. I want one thing to happen. By the way, all of this is recorded, so if you decide to join or whatever, you go into the membership area, and every session that we do is recorded. For learning purposes, you can go back and expedite your learning curve. But that's what you'll see us say the entire week. So we keep going. We say, nope, just the one thing. I want to see the one thing. Well, it didn't happen today. All right, we'll go over here on a day trading standpoint, small time frames, and maybe kind of have some fun there or whatnot. But ultimately, what I'm doing is looking for this one thing, and I'm just going to wait for it, and then it happens. So I waited, I forget, a few days on this. I mean, it was more than that actually, but I waited a little while for it to happen, but then when it happens, there's no hesitation. It's just like that. And on the downside, that's why I said to myself, look, ultimately I'm willing to sell the market here because it makes sense, but we have been in a relentless uptrend, and it's possible that we continue, okay? Therefore, I want to utilize that trigger line. Because if price would have gone back up, let's say, okay, maybe price would have done this. Actually, it did, but let me take it a step further. So let me move this over a little bit. There you go. So what I want you to see is how price came down, right? I'm going to move that back. And the moment that it did, let's look at what happens. You see right there? So we just peaked below this, and you pause. In fact, you bounce back up like that, and then you decline again, and then you really start to go sideways and so on. This was just our projection as far as how price was going to function. All of that's, as always, done before it actually happens, but this is kind of what we drew in, and you kind of see where it is right now. We're expecting it maybe to go down here, get a little bounce up. Hopefully it'll continue on the downside, but we shall see. All right, but again, that's the idea, that's the principle. I simply don't want to predict. I want to try to give myself a strategic advantage. Where are the buyers? Where are the sellers? I want to be on the sell side when the selling analysis occurs. I want to be on the buy side when the buying analysis occurs. And then I want to get out and or at minimum protect my investment before I reach the opposing. So now we can see why that departure is so very critical. Ironic, isn't it? Because it's like one little thing. It's like, oh yeah, I see a candle move or whatever. I see what you call the departure, super simple information. But look at the information that we can derive from it, right? We can take it way far, and again, it's always based on sheer logic. We try to get that core understanding of what the order flow means on the corresponding market and then just kind of go from there. All right, so now let's go back up. And let's finally, Will, you've been talking, let's go back up, get back to the point at hand. We began discussing these areas right in through here, right? So if I kind of highlight those, which I tend to do a lot of times with just the rectangles in general. All right, so I kind of highlight these areas. The idea behind this, the principle and or logic, if you will, is quite simple. On the way down, what we have, especially in the larger time frame scenario, so the bigger you go, the more this is going to happen. Okay, 60-minute chart though is pretty big for day trading. So for all intents and purposes, on the 1 minute, the 5 minute, the 15-minute even, I'm going to see multiple supply levels perhaps within this area. Now I could show that, right, for all intents and purposes, using our secondary zones. I can absolutely show that, and I can specify any time frame that I want to. Okay, so for all intents and purposes, I could go up there, and as you can see, there's two 15-minute supply zones. Let me turn those back off. So again, I can set this to any time frame I want. If I want to, you know, range, volume, all that good fun stuff, but we don't need to go into that. I'm pretty sure you understand what I'm doing there. Showing simultaneous multiple time frame zones. Okay, and within that information, let's say that out of those crazy 10 million sellers, what tends to happen, they're moving so fast, right? Because the imbalance there of the amount of buyers against however many sellers there are, when you get, I wish like if you could see me right now, I could probably give you a better, but what you get is abrupt jumps, right? So you know how when you're watching the tape or the tick, you know, maybe your dome or something to that extent, what you'll have is you'll have these moves kind of slow and steady, and then boop, right? Well, I kind of messed that up, but it'll move slow and steady and then jump, right? Jump like that. So you'll see the tick increments kind of increase or decrease, move really fast because it just skipped over something. All right? And the reason that it skips over something is there's too many of them. So what you're seeing in the actual numerical values here, 4503, 3721, etc., what you're seeing is the number of executed orders. What you're not seeing, and this is the most important part, what you're not seeing are how many orders was actually submitted there. So there's two states of orders we want to talk about, okay? Submitted and executed. Submitted, i.e., could be considered, if you're going into like the proper terminology, I suppose, could be pending, right? So pending orders, let's say we have out of 4,503 pending sell orders, there may have been 10,000 actual, I'm so sorry about that. Out of 4,503 executed sell orders, there could have been perhaps 10,000 pending sell orders, right? So there's your math. That's approximately 5,500 sell orders that did not get executed. Okay, so this is where it got a little bit confusing way back when. Most, you know, get the principle now. But the idea, folks, is simple. Where we have these unexecuted orders, they're still located in the abundant area of sell orders as a generality, right? In other words, this area right here, this whole supply zone, that's where the general supply took place. Now I need to go in there and see what's left. Because if I'm going in and I'm looking and I'm saying, yeah, I want to trade this right here. Well, ultimately, what I'm saying here is I want to go in and sell where all the other sellers have already been executed, right? Or not all, but the majority of them have already been. And that is counterproductive. So I don't want to do that. That's more of a form of support and resistance, i.e. it is designed to add confluence measures to what we are looking for, right? And what we're looking for is to submit and execute orders where they've not already been completely removed. Now remember, I'm not doing that randomly. So they still need to be in the appropriate location, supply, demand, etc. All right? But we can absolutely get very granular with that and mitigate our risk even further. So I hope, you know, hopefully that makes sense. I'll kind of delete this here and then maybe take just a moment on this. There's so much here. What I'm going to do, and I'll try to move pretty quickly with this, I like to get out some information like that, you know, some kind of key ingredients along the way to help you see what in the world it is that we do, how we do it. But what I would like to do is just kind of scurry through some of the functionality so that you know that it's there, but I'm not going to touch on it too much because time, and I don't want to take too much of yours, especially on this celebratory day. So that being said, let's look at a few of them, and I'll be happy to answer any questions, and then just analysis. We can look at multiple markets, whatever you want to do, okay? All right, so in the zones in and of themselves, remember we have multiple. We have 2 sets of zones that we can put on any time frame. Let's say that I am a swing trader. Well, perhaps what I want to do is look at the larger supply and demand in the market, right? So for all intents and purposes, I could even put the primary, I mean, I could go way, let's just get kind of crazy with this, but I could put weekly zones in my primary, and then over here, I could put daily zones. But wait a minute, I'm on a 60-minute chart. Correct. So the zones don't have to be what the chart is, right? So if I go into this and in the time frame setting, you can see here I have this specified as default. Default does indeed mean what the chart period is. So no matter what I do, this is a convenience measure. Whatever time frame I switch this chart to, if I were to go to 4 hour, the zones are going to change to the 4 hour zones, right? However, if I go here and specify that I want 240 minute or 4 hour zones and I click reload settings, well, now my zones are going to change. I'm on a 60-minute chart, but I'll see 4 hour zones. If I go into my secondary zones and I set those, as you can see there, they're already set to 15 minute. So again, even though I'm on a 60-minute chart, if I reload the chart, I'm not going to see 60-minute zones. I'm going to see 4 hour and 15-minute zones on the 60-minute chart. So I hope that makes sense. You'd be surprised how advantageous that can be, you know, especially a lot of times for swing trading, all the way down to like even scalp trading, right? I like to, now I'm not a scalp trader. I'm not trying to say that I definitely am not. I don't prefer scalp trading myself. Perhaps I'm just not really good at it, but that's okay. You know, admit our faults, right? So with that being said, the benefit though on scalp trading is I could go to like the 3 minute. We do a lot on the 3 minute chart. Example, you'll see that over here. So on the 3 minute chart, by the way, you can see how that supply is holding there in real time. This has happened since we've been in the room. I apologize, I haven't been able to show everything. Again, just limited time. Okay, let me do this. Let me halt this real quick. I mean, the markets are moving so slow, but look, here's the thing. Let's break this down. What's the software doing? Everything you see here is automated with the exception of this line right, that line right there. That's not automated. That's the drawing object. Okay, that's that path tool drawing object. Everything you see here, if you notice, like I can't even click or move on that. That's all automated. It can be toggled, trend lines, okay? I could toggle them on or off, etc. The zones, this is called a DVD. Look at this nice number here, by the way. I find it so ironic, but I've been seeing a lot of these numbers. So maybe some of you are spiritual or whatever. What in the world does 4444 mean, you know? I've heard people, they really dive into what, you know, this numbers 111, 222, and so on. What do they mean? I don't know. But anyway, folks, all joking aside, we have this DVD at 4444, right? So if I analyze what's happening intraday here, we can see that we indeed have a downtrend. We've been making lower lows and lower highs. Pullbacks to supply seem to be holding quite well. Ergo, I would expect a continuation on the downside until, and here it is, until demand exceeds supply, right? When that starts to happen, now I'm going to go, hold on a minute. The governing dynamics are changing, right? Why are the buyers defeating the sellers if we have a clear and concise downtrend? That doesn't make sense. So then we adapt and, you know, evolve, if you will, to that more recent and current information. So I want to have that information at all times and be aware of it, you know, going into the methodology, etc. But right now, again, looking at the 4444, so this is our DVD. Now we have a 4446. So this is our continuation patterns. To show that, I go into the tools, continuation. I could turn those on or off at any time. I can also hide or, you know, continue to allow the historical RBRs and DVDs to display. As we said, everything is back testable. So let's look at this DVD right here. Reason I want to look at that, let me expand on this, so hopefully you can see that quite well. Okay. Hopefully you can see that quite well. You can see that there's a hash mark here. Now, in real time, that looked exactly like this 4444. So the reason I want to bring it to your attention is simple. In the context of a downtrend, pullbacks, and this is what the most basic means of trading. I imagine every investor out there in the world, probably does this inadvertently, even if they, if they're not doing it intentionally. It's happening somehow. But they're trying to play the pullbacks in a direction, right? So our continuation patterns allow us to see what we call accumulation, what many people call accumulation. Simply where order flow begins to consolidate and build up, like what's happening right now. Okay? When this starts to happen, we then say, hold on a minute, there's a pause, let me wait for it. Typically, whoever wins that battle is going to be the stronger side of the market. Okay, so I'm just throwing this out there. Rule of thumb generally on these continuation patterns, most of them provide about a 1-to-1 distance away from it. That being said, just like zones or anything else, we never go out. We would never just go out and submit every line that we see on the chart. That would be extraordinarily silly on our part. We would not do that. But in this particular instance here, we can see again that we have that downtrend in occurrence, right? And what we've just gotten was yet again another pullback. So here we're accumulating to perhaps do this. Now if we go back in there, where are we likely to go? See all this support? It is astonishing and amazing, in my opinion, how the markets and the patterns within it, the information, it's all self-fulfilling. I'll take you a step further. What I could do here is throw fib analysis on there, right? So typically in a fib situation, we would expect a 127, 1618 on the downside of any normalized trend. And that is a very common fib pattern and or extension. Typically that would indicate a head and shoulders and or a inverse head and shoulders pattern, okay? So here, if I take, this is a, by the way, you see if there's the acronym PFA before it, that means it comes with the PFAZoneSuite tool. So I have the PFA fib zone here, and if I pull my fib from left structure up to the high, well in this case that would be the high, the right structure, notice how that 127 to 1618, okay, so if I want to go do something like this, I can go into my fib zones and extend that to the right. Again, folks, there's I apologize, it's just simply too much bells and whistles here for me to show you all of it, but a lot of stuff, yeah? We have trail stops built in, trend IDs, trend lines, the fib zones, market structure, continuations, altitude grid, so on and so forth, a lot. But in this case here, right, if we were to break that 4444 on a projection on the downside, maybe I want to use my fib analysis, or maybe I could get simple and just use the visual aesthetics. Doesn't really matter, they're all going to be self-fulfilling anyway, okay? So that 127, 1618 on the downside will somehow, right, it's miraculous, it seems, but it will somehow coincide with the, in this case, prior analysis and or what we've done before or what anyone's done before, right? So they're looking to that support, the support line, for example. Yeah, it's pretty astonishing, but that's what you have there, 127, 1618 on the downside intraday. If we were to start to break this 4444, we may very well see 4442, okay? Now that's a tiny time frame. Remember, I went down to a 3-minute chart. This analysis would be exactly the same if I were on a 60-minute, but the numbers would be much more expanded, right? So I would feel much better about that. And this is why I personally don't really do a lot of scalp trading. As you probably are very similar, you may have a lot of things going on throughout the day, 50 million things it seems like sometimes. So it doesn't make a lot of sense on a, for us at least, to stare at a screen and try to make decisions when we're trying to do other things throughout the entirety of the day. So that's, just throwing that out there, but everyone's a little different. I'm just understanding that the analysis is indeed the same across, all of these different time frames, okay? So our continuation patterns are used for all intents and purposes They are built in. Now this is only going to be available in the PFAZoneSuite. If you have the PFAOrderSuite, you would have buy, sell, up bar, down bar, and then the remaining values down here. I would love to spend a little bit more time. Again, I don't want to take too much of your time, but the entry zone it's a really cool feature that I could talk about in just a moment. But yeah, so let's kind of look at this real quick. If you have access to the Zone Suite, however, I could literally go there right now and just put a DVD entry. That's it. Now, what's really cool about that, or what I think is another advantage to it, if I go here and I submit that, it's going to constantly look for the DVD. So let's say, hypothetically, this DVD becomes invalidated, just the same as the lower one did, right? So you'll see it disappear, which means that it is no longer valid. There was a DVD here. We formed a new one. This became invalidated, and so on. Okay? So what would happen is this would disappear, and then even if we drop down and touch that, it would not submit the entry. Okay? It wouldn't submit the entry. And the reason that it wouldn't is because there's no active DVD. So what it begins doing is just going, okay, well, it's just continuously looking for the next one. Well, if we don't have it, I just adapt to the next bar, the next bar, the next bar, but I'm not going to do anything even though I've been submitted. And then when I finally get an active DVD, it would submit on the touch of that. Okay? In this case, I'll go cancel that, and I can toggle it back off. All right, very good. So again, I said I would touch, I think this is probably going to be the last item that I touch on just for time's sake, but I do want to touch on the entry zone. So let's say that I wanted to buy the market, and again, everyone's a little different, right? So they have their own analysis. We'd love to have you in ours, and we teach you everything that we do, but maybe you just want to use the order suite, maybe you want to do things a little bit differently. Perfect, that's wonderful. So in such a case, let's say that I wanted to be the buyer. I'm just going to throw this out there because I have no, I don't really have any analysis to do this. I don't have a strategic way of doing it. But let's just say that I wanted to buy below this structure for whatever your analysis deemed, necessary. And then the lower you went, the better. Maybe you're looking. I'll tell you what I could do is I'll give you this hypothetical. So let's say that I wanted to get below that structure, and I wanted to, you know what, folks? I'm going to do even better. I'm going to give you a pretty decent hypothetical here. So let's say that we pull that fib zone again. Okay, note the DVD disappeared, by the way. Do you remember what I said about that? Okay, so let's say that I want to be the buyer, but I want to do it down by low, right? So I want to go down to that 127.44.42. All right, I want to take an RBR. So in other words, I want a means of confirming my entry, but I don't want to do it right now. So I could go here, and I could say, you know what, show me an RBR, and take it. But we don't have an RBR right now, right? So it's not going to take that. Now, let me cancel that and show you maybe a better way. So what I would want to do is say, you know what, I do want to take an RBR. I want to be the buyer, but I want to be the buyer in a very specific location. I'll come back to the adapt zone in just a moment. So the entry zone, okay, is a very unique tool. So I could go now and I could say do that same thing. Take the RBR. But do you note how there's a rectangle here now involved, right? So there's a rectangle here, and i.e. the zone, the entry zone. So what I could now do is pull it down, and I could say, here's what I want to do. I want to take that RBR, the confirmed entry long, so to speak, but only if it's inside of this particular area. So now I go up, I submit. No matter if we get an RBR or not, it's still not going to submit that because I've dictated a price value, a price area zone, right? So again, I'm only going to take that trade if the RBR occurs at or within this particular zone. Now I said that just a moment ago I would come back to the adapt zone. Let's go down here and turn this on. I'll explain what that is. So if I enable the adapt zone, again I can go back and submit that order, but here's what's going to happen. As price, let's say price declines and so on, okay, we go down. Well, let's say that for whatever reason price goes a little bit lower, okay, so maybe it doesn't form my RBR inside of the area, but it goes down and then comes up and forms the RBR. All right. If I have adapt zone enabled, what it is going to do is keep going down. So every tick, every increment that price decreases, it is also going to increment the entry zone. In this case, it would go down to there because that's how low price went. All right. Now, another added benefit of the tool that I haven't even discussed is our maximum risk. So built into the tool, we have a maximum risk. I'll go here and open this and show you really quick. Order inputs, right? So in the primary zones and so on, we can see here we have a maximum risk value. I can set that in ticks, currency value, the dollar, etc., and then I can give it a value. In this case, I've specified 1,000 ticks, and the reason I do that is because I manage the scenarios anyway. So if I want to show something big on the chart, I don't want to go change my settings. Okay. But again, I could set a currency value here, and then I could say, $100, whatever it is. All right. So let's say that we set, 8 ticks, which is equivalent of 2 points on the S&P. So I set an 8-tick maximum risk tolerance. Here's what happens with the adapt zone feature. It would come down, okay, so as price is declining, once it reaches the top of the entry zone, remember it's activated, ready to take that RBR so long as it's been submitted. As we decrease, it takes the bottom of the zone down. It will not take the top of the zone up. In other words, we can get a better, kind of like a limit order, we can get a better price on the downside, but we cannot get a worse price on the upside, okay? That's the adapt feature. And by using that 8-tick risk management, the low of the zone will indeed continue lower, but once it reaches that maximum amount, it will therefore begin to drag the top down with it. So in this case, we're at 44.38 quarter, so it would be essentially at 44.40 quarter, right? So that's 8 ticks. As price continues to decline, instead of just the bottom moving, now it's just going to keep dragging the entire zone down. So the RBR, wherever it goes, it would need to happen at or within this particular zone in order for that trade to be executed. So again, that's can be a little bit overwhelming, I suppose, but the entry zone is a magnificent feature in my opinion, nothing more, nothing less. It's just a unique tool that we found necessary because we wanted to be able to walk away from the screen a lot, things to that extent. So that's what that is, folks. I think, like I said, that's probably the last tool or feature, if you will, that I'm going to touch on. Without further ado, I'm going to let you guys and gals ask some questions, and we can look at some general analysis if you like. But let me see if I have any questions first, and if I don't, then I'll do a little bit of analysis on that. Okay. No, I did not submit that, so I'm going to go turn that off. And I can turn that off. Remember, I can do all of this from the menu alone, right? So if I wanted to buy the market, okay, but what if I want that trigger line? Just go enable it. Now you see the trigger line is there, right? If I want to unlink the orders, just move it. Now we have dashed lines. That means they're no longer maintaining calculations here. If I want to reset, then it will. Okay. All right, let's see. So this is pretty typical. There's a lot of folks in the room. I know that when I go through things, I try to be as in-depth as possible. But I'm going to give you all just a moment because I do want to get any questions that you have. I do want to get them addressed. Like I say, it's pretty typical, though. I found that a lot of times maybe I don't get a ton of questions, and maybe it overwhelms you a little bit. But my thing is just try to get them as much information as possible. They took time out of their day to be here. I might as well do that as well. Oh, you can see the account is on every. We put the account on the label, right? Because, for example, let me show you this. Okay, this is important. I say that a lot, but I think most everything's important, right? If you notice right over here, right? So you can see the account right there on all the labels. We do that. So I've made the mistake before. I've accidentally. You got compliance and all that stuff, right? But I've accidentally, submitted a trade for all intents and purposes on a live account when I meant to do it on a sim account or whatever. And it just kind of, again, became a necessity. And then there were different things. Like I have VPS running constantly, right? So that's where I do the, quote-unquote live trading or whatnot. And what I would find is that let's say that I'm going to go a little bit too in-depth, I think, but let's say that I want to hedge the market, right? Well, maybe 2 accounts are required for that. So what I would find is that I was submitting to maybe 1 account. So maybe this is not one here, but I'm saying maybe my live account, and then I would be attempting to hedge the market as well, but I would be maybe doing it on the same account. Right? So let's say that that I'm trying to submit a long entry on the micro E-minis, but then I want to go hedge against it with the micro E-minis or whatever. I mean, maybe whatever the reason may be, but it could happen on the same account. So that's kind of a big thing there, whereas I never want that to happen. I've had, like I said, mistakes. So yeah, and again, so you'll always see that though. We can disable, I think it's called risk reward. We can disable those on the label, but I always leave them on because we put them there for a reason. So the information that you'll get on the label in and of itself is the amount of contracts or shares or lots that's being traded. If it's a long or short position, okay, you can see that on all of them. The instrument, you're thinking, well, why would I need that? That's kind of silly. That's something that we didn't talk about. In this, I can literally go submit orders. Matter of fact, just let me show you. I can go, and I like to do this. So I can get the analysis from the E-mini S&P 500. This is the futures, okay? But for all intensive purposes, I may want to submit it to a different market, right? Why would you want to do that? So here's my hedge instrument. I can choose any market I want, okay? And then submit orders as, I could say submit them to the hedge instrument. Now again, why would you want to do that? Well, let's go look at something like this, okay? So if I specify the micro E-mini September contract, and I've told my primary orders to submit to the hedge instrument, okay, let's look at that a little bit different. You see the difference here? Okay, so now it's telling me, wait. The orders here, any order that's submitted, it's not going to be submitted to this market. In other words, if I submit this right now and it touches that, it's going to instantaneously submit the long, but it's going to submit the long on the micro version of the S&P. So again, it's so many bells and whistles here, but that feature initially was developed as a hedging mechanism, okay? I found ample amounts of further benefits to use that, such as what I just told you. Maybe I want to get my analysis from the E-mini futures, the S&P 500, because they've been around for so long, whereas the micro E-minis are relatively new instruments. So maybe I'm looking on the weekly chart and I just don't have that much data. So if I want to get the data going back historically, I probably need to use the E-mini. But again, if I want to submit smaller amounts of currency value, or for whatever reason I want to do it on the micro E-mini, I can still do that using this instrument. Hopefully that makes sense. What a great question. Thank you. That's a great feature. Awesome. Thank you so much. Really appreciate it. Oh, Casey, I'm sorry. Where was that? The top of the wick on the 10 o'clock. Was I on the hourly chart when we were looking at that? Is it over here? Yeah. Okay. You're talking about the top of supply. It is the top of supply, right? So yeah. Let me go toggle this off. Okay. So it's just the top of the supply level. That's what that is. Yeah. I can give you specifics though if you like. Hold on one second. So the data, I can use my data box. And if I hover over that candle, all I have to do is put my mouse there. And then if I look in the data box, the high was 44.93 3/4. Remember, this is on the September contract, and I say that because it changed quite dramatically from the June contract. It was a pretty exponential difference. Okay, and I can go back here and just maybe toggle this stuff off. All right, very good. If it purchased a loan due to budget, Do the suites come with instructions, as it seems like they are full of features? They are indeed full of features. I will tell you that. Of course, yeah. Let me just say something from the heart, folks. Okay, hey, call me corny, call me whatever you want. That's fine. Get to know me a little bit, and I think we'll have a different relationship. But here's the thing. Absolutely, documentation, tutorials, all that good fun stuff, because we build this for us, but then of course, put it out there for everyone to use, and we put the same thing that we use out there, meaning same templates, all that good fun stuff. And as I said, the sales that occur from that help us to continue the development and all of that, right? So we appreciate that very much. But as far as the instructions, all that, we do all of that because from a user standpoint, you're going to need it. I don't say you're going to need it as in like, it's complicated. I just mean there may be some question that you have, or how to install or anything like that. By the way, we do that for you if you like, no charge, of course, remote support and all that. But here's the point that I was trying to make. Support is very critical to us, so we do our best. And folks, look, we do our best. That's how I'll say it. We are, humbly speaking, no one's perfect, right? But I will tell you that we do everything in our power as far as support goes, and that means anything from the training, methodology-wise, if you join our community, etc., anything to do with training, remote support, if you need, software installations, we'll do your initial install, all that. Of course, we do all of that. Yeah. So like I said, just call me corny, but from the heart, we will do our best to try to help you to any degree, that we're, of course, physically possible. Hey, thank you, Nileisha. I appreciate that very much. That's super kind of you regarding the features. Really do appreciate that. Travis, hey, Travis. Long time no see, my friend. Yeah, okay. Yeah, wonderful. I'm using NITRE version 8027, and an announcement pop-up is stating required update by this Friday. That is correct. So I would just, and I'm glad you're saying that, because this goes to all NinjaTrader users. I got the same notification, right? But they are requiring you to update because they changed their entire, structure. Matter of fact, I had an email from one of the members asking, something about that. I think they had recently updated and so on. So there was some code-breaking changes in their infrastructure alterations. We immediately addressed it, of course. Our software is good to go. Don't worry. But yeah, I would tell you go ahead and get updated, because they're going to stop supporting the past. I forget the version number, but they're going to stop supporting the past previous desktop versions and so on. Yeah. So it's just a different login process. Honestly, the platform's exactly the same for the most part. As you just log into their ecosystem now, and I mean, it is nice. It's user friendly and all that. So your question, will PFA software? Oh, okay, yeah, the past versions, no. So you'll want to update 3. That is correct. So the 3.1.0.6, we just can't control, how they do that. So they have only, I will tell you, in the past, code breaking changes. Like I think out of the decade, we've been doing this for I don't remember, 12 years maybe, as far as the software development. But I think there's been like maybe 2 that, off the top of my head, code breaking changes. So yeah, it almost never happens. So, but anyway, all right, you're very welcome. Yep, absolutely. Yeah, they are for an entire year. Yeah, absolutely, Casey. Yep, for sure. Yep. And then even after that, so like 10 years down the road, there's only a maintenance fee. You'll never have to purchase it again. Yeah, that is correct. All right, very good, folks. Thank you so much. Any analysis questions? Anything you guys want to do for fun, whatever, anything like that before we conclude? I'm just, here, happy to help, and I mean, it obviously helps myself. I can just address some of the things that you're probably going to see on social media. Again, everything's always done in advance. I mean, I can talk about it if you just want me to do some general analysis. Give you a really fast, because we're pushing time here for all of you, I know. But yeah, I can do that. I will remind you real quick of the Let me just post the links. How about that? Okay. So if you go to our site, I'm going to post a few links, so just bear with me. I apologize. Again, I don't want to overwhelm or anything like that. This is literally, I'm just posting the links to the product, okay, and there's the order suite. Now, I will mention this. Regarding the software, there are these features, like if you watch the videos on the pages that I'm sending right now, we need to update the video. That was the prior version, so there may be a few features like add, remove, etc. that you saw today. It is already released, and if you download the software right now, the features will indeed be there. I'm just talking about the little intro video. May not have every single one, right? So now I'm going to give you. This is the Zone Suite, and finally, let me get into. Because there's only 4 things total that we're offering. All right. All right, there is the community yearly, and then the community lifetime is coming. All right, and like I said, folks, we love to have you, but let me know if you have any questions or whatever. Let's just do this stuff together. Let's see. Are the ES and SPY related? For example, if analysis is done on the ES, can orders be submitted on the SPY, otherwise known as spiders, folks, by the way? Yeah, so absolutely. The SPY is the ETF version of the ES. So the ES is the futures contract on the S&P 500. Conversely, the SPY is the ETF fund correlated to the S&P 500. So yes, that is here you go, right? That is how I use the hedging a lot, just so you know, right? So when we circle back and we were talking about setting the primary to, one market, setting the secondary to the other, right? So imagine I have the SPY right here. So I go here and I can submit the orders, etc., but then I want to hedge against it. All right, so if I'm trading the SPY, the spiders, I may want to go hedge my position with the micro E-mini futures. See how that works? And I can do that literally from one chart. So just a little feature there. But yeah, it's funny that you say it like that, because that is absolutely a possibility and really one of the reasons that we initiated it. Let's see if there's any other questions coming in. I'll definitely address them. But let's look at a couple things really quick. So let's just look at the S&P, of course, as my go-to. I don't want to remove that draw object there just simply because I did put it there and I want it to remain. Real stinker, my mistake earlier, but hey, it happens. I closed out that position, accidentally. It was my fault. It is what it is. I submitted the order. You probably, I don't know if you call it whatnot, but I submitted the target above. Silly me. I submitted where the target was above current price, and when price updated, it essentially closed out my position because I did tell it to take a target at a limit price. Okay, better than where it was, so it just kind of closed that out instantaneously. But oh well, it happens. So I'm going to leave that draw object, but I want to do a quick analysis on the S&P, folks. So let's go top down, yeah? All right. I'm going to do all this in real time, of course, as always. I like to just show it as it is. What I can do here is, so we addressed this previously. We expected, price to go through it, not at the beginning, but towards this, once price started to accumulate and, all that consolidation occurred, at such a time it became like an expectation that we make a higher high. That being said, this right here is absolutely there, okay? And we have no accumulation. We have nothing. We are nearing, folks. It's astonishing, right? But after all this, we're nearing the all-time highs here back on the monthly chart. If you've been with us for any excuse me if I can speak properly, my extended period of time, even in the free events, you'll know that we have remained bullish this market long-term the entire time. Not one time have we said that we're going bearish. Never. We kept saying, look right here. If you go back to the previous, I think this is probably on recorded or something, years ago, we said specifically, look at 3,500 or lower. Now, mind you, that was when price was, you know, it was way up here. Okay. If you really go back, what you'll find is there are 3 areas we talked about. They're historical now, but we talked about this area right here, this area right here, and we said those are bounce plays, etc. This is where we're looking for the real change in the market. Okay. So just to give you a little history on that, to go forward, right? Because we always want to look forward, not backwards. I would be very cautious here. The markets are extremely bullish, don't get me wrong, but that's a long-term approach. We're talking about months, even years, okay? So with that being said, and you've seen this, we talked about it ample amounts of time, shorter term, we are indeed going to most likely turn bearish. I didn't say that we are bearish, I'm saying we're most likely going to turn. Remember, we needed to see the supply exceed the demand, and that's relatable to the corresponding time frame and or pairs of time frames in which we use. For example, intraday trading, swing trading, position up to long-term trading. So each of those hold their own time frame pairs that we look for. So I may be, and in fact I am, bullish the long term, whereas just a little bit ago, you know, the past year, well, back in 2020 for sure, excuse me, 2022, boy, I'm dating time quickly, huh? So I will tell you that we were simultaneously bullish and bearish, same market. How is that possible? Well, because we were long-term bullish, the S&P, shorter term, extremely bearish. You know, so it really goes into what type of trading and or style that we're doing, and we distinguish all of this. Yeah. Right now, though, again, I remain bullish, very bullish on the long-term S&P. However, there's absolutely no way that I want to be up here buying. Okay, I just don't want to do that because we're nearing. I can delete this, by the way. Another feature of the zone. I can just get rid of that if I want to. So if I'm nearing this 45.10.50 on the September contract, this is telling me, whoa, 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 you've been going up, 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 and you had a monthly vertical candle. At minimum, I want to back off the buy side. I don't want to touch this thing on the buy side. There's no way I want to do that. If you wanted to see, and anyone who's in our training, you know that on the daily time frame, based on the longer term, we had the buy setup, which was right here. Okay, so I want to be the buyer after the move. I'll show that to you in just a second. Want to be the buyer on a down move, right? So in everyday's life, every aspect of everyday life, I suppose, that's normal. Of course we want to buy low and sell high, but that's the opposite of how we typically view it in the market. Oh, it's in an uptrend, right? So as market's going up, we want to buy. But that's counterproductive to the buy low and sell high concept. We use a dynamic range in the market, which means that yes, technically we're trending, but there's always the buy low, sell high territories within the context of the market. Okay, that goes into our training and so on. But anyway, suffice to say, right there was our buy setup, and notice when we were buying was after the monthly charts decline. But remember what I said, all the way from up here, we had specifically talked about 3,500. Okay, so I mean we got lucky on this. It hit it, you know, almost. I think it was like a point or something. But anyway, I mean we got lucky. Sure, we're not trying to be perfect with it, but the general area. And then if you want to see how we actually entered that, there was two ways. We entered based on our continuation as well as our zone, or that's what we discussed. Hold on just a moment. I turned off the continuations. Need to turn. There they go. Okay, so this was, I'll tell you how it actually happened and how it should have happened. Okay, so it should have, here was our entry. We were looking to buy the market right there on the RBR pattern that you see. Okay, unfortunately, any of our members can contest to this. They'll tell you I was like, oh no, how is this happening, right? But in real time, Kinetic, for whatever reason, they handled their holiday data different, and I didn't have that RBR at the time. I had to reload all the Kinetic data in order to sufficiently get it. The only reason I knew was because of my live data, CQG, you know. But anyway, suffice to say, we missed this one as a data discrepancy. We did not miss that one. So this is where we were buying the market, right? And then the second option, again, this should have been the second, but I'm going to just call this the first because that data discrepancy. So the first was here. If we have two means of trading, by the way. So RBRs and DVDs, etc., what we call our continuation patterns, and our supply and demand levels, right? So the difference in our traders, some like to use this style of trading, others like to use the levels in and of themselves. We've specifically really been talking, predominantly about the levels. I typically would use these on the larger time frame, but suffice to say that was it. And then the second was right here, that demand zone right there. Okay. Now remember, think about what was happening. So there's the outcome of that. But let's put this right here. All right, and let's look at it that way. And let's think about what we were doing when we were thinking about hitting the buy button. Go back up to that monthly chart. Do you see how terrifying that is? But at the end of the day, the reality is we were buying it low. So it shouldn't have been terrifying. It should have been us going to the Ford dealership, asking for that new F-150 that they want $80,000 for, and being able to buy it for $60,000 that day for whatever reason. Same truck, same everything, no difference, just a discount. So we try to approach the market that way. Not always perfect by any means, but we do our best. All right, so anyway, right now we're not near that, folks. The point is that I'm actually rejecting the buy side of the market now simply because we've gone so high so fast. All right, and we're nearing the all-time high. I mean, 4,800 is a little ways off, but the point is on a long-term chart, we're not that far. We've rallied up exponentially. So we're going to stay away from that. And on the daily time frame, we're going to look at potential shorts. And so just to throw that out there, you'll probably see some of that coming into play with our content and things like that. Also the VIX, I think it's currently trading at about 14. Last week I think it ended at 1354. So the VIX is very low. Expressions with that, buy low and sell high and all that stuff. Talking about the VIX, it's inverse correlation. So everything everything from the VIX to just the general analysis that we're seeing is saying, just this is not good. Meaning, I wish I could just jump in and buy, but absolutely the analysis is telling me not to. Okay. All right. So that's longer term approach. We go down in time frame. You can start to see where we are on the weekly charts, right? Same thing. We have multiple supply zones here, but I'll just delete this one because we've already, they're overlapping anyway. Up into that 4461, you can see how accurate the zones, are, and you'll see all that in real time. But you can see what we've done here is we've really touched this general area and immediately start to get rejected from it. Could we go higher? Absolutely we could. And we'll see, right? But ultimately what we know is that we have a long potential way to fall before getting back to anything. Support, demand, and so on and so forth. All right. So, look, folks, don't let me scare you. I'm not trying to scare you. I'm bullish the market. Be clear about that. However, there's a right time to buy, in our opinion, and in our methodology, and there's definitely a wrong time. This is the wrong time. Okay, and that's really similar across all the the index, U.S. index markets. Okay. All right. Now, let me pull up my tool real quick here. We have this tab selector. So what I'm going to do is kind of jump out through. So we have the S&P, NASDAQ. You can see again with the accuracy of our zones and so on and so forth. You can see how it's also being rejected from our 15,322 quarter supply zone there. Same thing on the NASDAQ. I will say the NASDAQ at least has minimal support on the downside. Okay, so if we go down in time frame, there's a little bit of support, hidden demand, we call it in through there. But as far as would I buy it there? Absolutely not. So I'm waiting the same way on the NASDAQ. I would be more eager, ironically, to short it than I would to purchase it. But I'm not going to do that until I see supply exceeding demand. Okay? In other words, I need the markets. Remember what we talked about earlier. I need for it to prove itself, right? Show me what it wants to do. And when I see the sellers take over the buyers, it's good to go. Same thing on the Dow. If you go back again to our social media and stuff like that, when we put this content out, you'll see on that day, this was going into the Fed announcement. We said specifically, that we were hitting the 34,617 and that we would not want to be the buyer. In fact, if anything, I think for almost verbatim, we said we would not want to be the buyer. If anything, we should expect a short-term rejection on the downside. So there it is. Now looking at it after the fact, we've now made a higher high into the level, however, okay? So we're being very mindful because remember the supply and demand imbalances and how all that works. Remember what we're doing is going up to hit the smaller time frame supply within the larger time frame supply, and then we will expect those rejections. That's why you're getting this right here, right? So we got rejected because we made a higher high into the supply right there. Got rejected as expected. Hey, there you go. It's a nice little rhyme. Accidentally. And then we make a higher high rejection, okay? So either we go ahead and turn down from here, or perhaps we make, one more high and then we get a stronger rejection. But ultimately that's what we're looking for at said time, okay? Again, at minimum, staying away from the buy side, not interested, okay? Oil, I moved this on there, sorry about that. On oil, the last thing that we talked about, and I'm just going to briefly go through this. In fact, this is probably the last thing that I do because it's too much time and I apologize for that. But the last thing that we talked about was, buying oil just below this low, right? So again, the same thing with supply and demand, understanding where the demand is, making higher highs and higher lows is important because we're hitting new order flow on the buy side. And when we did that, we kind of come over here to the smaller time frame and execute in accordance with that. You can see we're turning, even as we speak, from 71.18, which is a demand zone there. However, our demand came in down at the actual bottom. We are indeed no longer looking for buys, guys, because look at where we're arriving, okay? So again, buy low. It's pretty simple, right? But buy low and sell high. And the closer we are to demand on the bigger picture, better, strategic advantage we have on the smaller time frame. We just need to get a little bit more granular, confirm that supply exceeding demand, demand exceeding supply, corresponding with, the buy or the sell side and so on. Okay? All right, very good. What do you do in your in the membership room? Oh, what do we not do? Is a good question. So, rinse and repeat. So let me put it this way. Recap, rinse and repeat. Recap, rinse and repeat, right? So the reason I say that, how we like to do things, remember earlier we were talking about seeing is believing, we have to do this together and always in advance. That's important because otherwise how are we ever going to build our confidence? So the idea and the principle in the recap is to see, did it work or did it not? There's your confidence building. And then rinse and repeat, that's our forward analysis so that we can then recap it again the next day and then rinse and repeat and so on and so forth. So we're doing a lot of that, and every single component, every step of everything we do is going to train every part of it, right? So there's nothing that we leave out. If you have questions, real-time Q&A, just kind of like we're doing right now, but we do analysis, execute trades if and when they occur during the room, right? So for all intents and purposes, like let's say we're in the live room and I had a setup right now, sure, I would execute it, right? But I'll be honest with you, typically we apply an if-then-else thought process to that. And the reason that we do that is because we're always forward-looking. So hypothetically, let's say that I wanted to sell this supply level right now. Well, I can't go up there and I can't do that. How am I going to sell something if we're not there? You know what I'm saying? So what we will do is we'll, based on our analysis, again, it would have to, of course, be validated, okay? And once it's validated, we would say, okay, so throughout the day or however long it takes, if we arrive at 44, 49, 50, I'm going to sell, etc. We just kind of walk through it. Here's, how I'd approach the trigger lines, targets, and we're walking through the whole process. But I'm just trying to tell you that that doesn't always happen in the live session simply because it's a forward-looking approach, right? But that's your confidence building. See it, get it, understand the information, know how to do it, and then watch it over and over and over. It's a fun process for sure. Okay, folks, any other questions for me? Oh yeah, you just want, just trying to understand, of course, yeah. Is the, I'm so glad you're asking this. There's always things that I forget, you know, or that so thank you. This is one of the questions happen and help so much. Is the lifetime suite included with the PFA community, or is the suite only accessible for that year? Yeah, so that's, okay. Yeah, if you purchase the yearly, the Zone Suite is included for that year, right? Yeah, yeah. So let me put it to you this way. What you're really paying for in the yearly is all the curriculum, core curriculum. You know, you see it, what's listed on the site and so on. Click that link above you. But yeah, you're paying essentially for the training, the methodology to learn everything and all of it, right? The way that we handle that is, if you love PFA, which we're confident that you will, we certainly hope that you do, at any time inside of that year, if you decide to upgrade to the lifetime, for example, community lifetime, we will apply the amount that you paid towards that. So you're not going to pay twice if that's what you're worried about, anything like that. Or if you say, nah, you know, I mean, I've learned everything, because, I mean, ideally in a year, right? That's typically, you know, it's a good bit of time, but we do expect that it will take some time. So let's say within the year you're like, no, I love it, I got it, but I'm ready to go off, I'm self-sufficient, do this on my own. Then you can just purchase the software. Obviously that'd be cheaper, and much cheaper than purchasing the community lifetime membership and having lifetime access to all of it. So that's how that would work. Appreciate you asking that question. Clarity is always a good thing, right? Yeah, for sure. And if there's a discount along the way, something like that, like right now, okay, you take advantage of that. Yeah, if you wanted to, for sure. Oh, yeah, the boot camp video archive. So that's included in the community lifetime membership. And what that does is, so what we did was we took a month and a half, all right, approximately, I'm pretty sure it was almost exactly, but a month and a half, 5 days, okay, Monday through Friday, we nailed it to the wall, right? So we didn't take any new, it's not different material or anything. We took the course material, which, by the way, is very extensive. It typically takes people about 30 hours to complete. But we took the core material, and we just did a deep dive into it in the live room, like more of a live kind of experience, and we put it into play. We just walked through and did it all together over and over, and it was, I mean, those are about I don't remember the shortest or the longest, but I would say average, those are about 2 to 2.5 hours per day. So it's a boot camp. I mean, yeah, we put it to work for sure, but it takes it, you know, and just tries to expedite your learning curve. So if you went with the community lifetime, for example, I would still encourage you to go through the course. That's what you need to do regardless, okay? Go through the course. But then what we have a lot of our members do, we've gotten a lot of feedback on this, they will, at a later date, they'll go through the boot camp archive, and probably what I hear the most is they come back to me and they're like, oh my goodness, this is what you've been trying to say the whole time, right? Like, it resonates a little bit differently sometimes. So it's more explanatory, if you will, in regards to just general conversations, you know, or whatnot. Like I said, more of a live experience. But that's what that is. Again, not different material. Same material, different approach. Yeah, very good. Were you saying that PayPal is a payment option? Yes, it is indeed. Absolutely. So if you go through and you go to make the, so you click one of those links that I provided above, make sure you use the, I'm sorry, did I even put that? Let me put the discount code. Hold on. Okay, and that would be, you know, capital N, just like it is there. But yeah, so when you go through, all you're going to do is very typical. You'll go through a registration process, right? And then, you know, typical username, password, etc., setting up your profile. By the way, just to throw this out there, we don't even know your passwords. They're encrypted, and so I just think it's always important, because you never know what people really know when you put stuff in your profiles and all that. But yeah, ours is encrypted, so I don't even know what it would be. They're asterisks and all that good fun stuff. Very private. Try to remain that way. But yeah, so your register, right? On the following page is going to be your checkout and or invoice page. you'll see the coupon code field there. Put that coupon code in, hit apply. It'll update the pricing, of course. You'll see that on the invoice. And then down towards the bottom, there's going to be a button. I think, I'm pretty sure it says pay with PayPal, you know, or PayPal Pay Now or something like that. But it's very clear. Yeah, it's easy. You'll see it for sure. And then you can go through the process however you want to go through with them, and you can definitely pay that way. Yeah. Thank you for the wonderful questions, by the way. Yeah, exactly. It'll go through the end of day. Yep. It's end of night. I'm sorry. Yeah. So, yeah. Absolutely. Any other questions, guys and gals? What a fun! I've had a wonderful time with you all. Again, I want to say thank you so much because you took time out on a celebratory day to spend with me, and that's pretty cool. Really do appreciate that. I hope that somewhat the analysis, you know, if you follow and keep track on social media and all that stuff, you know, we'll keep putting it out there. Hopefully it helps to some degree. It's never going to help like if you were in the, you know, in our training, our live room, of course. But yeah, we'll keep putting it out there so that we can try to help with projections and analysis ongoing, and we'll show, you know, what we do and how we do it, etc. We typically try, if we can, to share the things that, like if we do something in the live room, for example, maybe that's where those trades come from, you know, by the way. So typically, if we are able to do one during the live room or whatever, we may try to go share that. We'll just we have to clip it from the video recordings, you know, each session being recorded. So it's a lot of work, but try to do it. Just curious if the discount code NINJA works on yearly updates or just new purchases. My friend, absolutely. Yeah, it does. It's going to work for anyone. Yeah. So we're trying to, as you know, Travis, you've been, if I'm thinking about the same Travis, right? Because we worked together for how many years? Long time. I love it, man. It's so great, by the way. You and I believe some of your family members, amazing. That's how personable we like to get. Yeah, long time. Okay, perfect. Yeah, so it is who I'm thinking. Yeah, wonderful. We like to get personal. You know that. But as you know, we're trying to always do the best that we can. We're not going to limit it to new members, no. So that is, you know, if you had the yearly 5 years ago, whatever, or last year, or you're in the yearly and you want to renew or whatever, it's applicable to all of that. Yeah. Very good question. Thank you, my good sir. Really appreciate that. Okay, and again, you guys and gals leave at any time. You do what you got to do. God bless you. Again, happy Juneteenth. It's awesome. Let's celebrate. I appreciate your time, but I am going to stick around just in case any questions come in. I want to make sure that I get them all answered, and just I hope to see you and join us, keep doing the analysis and all that. And if you have any feedback and you want to look at certain markets, et cetera, just you know, let us know in the live room. We'll do all that. Okay. Very good. Let's see. Oh, you're so very welcome. I appreciate the comment. And I love, by the way, that you're just learning about supply and demand. So everyone starts somewhere, right? My opinion on the matter is that you're much better off. Much better off. I just got off the call just the other day. There was multiple people, actually. I mean, but this happens frequently, you know, and so we're just having a little fun. I mean, ultimately with like social media and stuff like that, but we don't, you know, we're not doing like marketing, we don't do heavy marketing or anything like that. We just want to work with good folks and have some fun together. But I recall several people, you know, they say, oh, we wish that we would have found you guys first, right? And so, me too. Me too. But I would say you're at an advantage, not a disadvantage, an advantage, because if you're learning it, and I'm not, this is not an egotistical comment, I could be far from right, you know what I'm saying, but I believe that we can help you. And I just have to say it humbly, I believe that our way of doing it and being so methodical with it is maybe not the best, right? Let's not say that, because that's again, there's no ego involved. I just think it's one of the best ways, because we don't just take a strategy and try to trade it. That doesn't even make sense. There's not a strategy I've ever seen in the world, and I've seen many, and obviously there are some out there. I'm not saying that, because if you define a strategy, you're talking about encompassing a lot of things. But I'm talking about the execution strategy, Fibonacci patterns, supply and demand, support and resistance, moving average crossovers. I could go all the way down the road, overbought, oversold indicators, etc. I have never seen one work long term. The reason is because it's not implementing the further analysis. Without the analysis, none of that it doesn't even matter. I could sit here all day long and I could buy and sell every level that I see, and I'm here to tell you that I probably would do very, very poor. The reason for that is because I'm probably buying high and selling low, right? I'm not understanding and conceptualizing when I should be buying or selling and so on. Yeah, so there's a lot that goes into it, but it's very simplified, and ironically the most basic information of all is the most important in our opinion. So I think you'll come to find that pretty quickly. We try to simplify it though. Yeah, try to simplify it. Yeah, just the, Travis, not if you do the yearly. No, not if you do the yearly. Yeah, so I mean, in other words, if you decided to do that, then no. But yeah, I mean, it's one of those things that was kind of out of our control. So years down the road, it's possible. That's what allows us to do the ongoing development, right? Just allows us to keep on keeping on. Again, we don't do a lot of heavy marketing and stuff like that, so we gotta do it from somewhere. Okay, thank you. You as well, absolutely. Is there a way to confirm that price is going to bounce off a level or going to break through it? Ironically, I've probably already given you the answer to that question today. You just didn't know it, right? So let me just tell you a few components of what we're doing, right? Remember how I told you that, I'm trying to think of the way. Okay, let me give you an example. This short trade right here, yeah? I never went there and just pushed the button randomly. I waited. But look over here. Do you see where we are? Right? So, yes, I mean, is there a way to always confirm exactly and be perfect with it? No, I mean, definitely not. But is there a way to mitigate the being wrong, I guess, it going through the zones and so on? Absolutely. That's the whole purpose of what we do. Okay, so we want to gain our analysis, get our perspective. We even play a little game. It's called buy, sell, nothing territory, etc. But we go through all of that, and then we let the market show us. So to answer your question, yes, we've seen so many times people a very common question is, how do you mitigate bull and bear traps? That's kind of what you're asking anyway, right? Because sometimes you get a bull or bear trap just above or below a zone, and then hits your stop, and then it goes directly where you thought it was going to go. So it's along those lines, yeah. So instead of just randomly going up, and I understand a lot of supply and demand traders do it that way. That's their prerogative, and they probably maybe do a great job at it. If you're really, we have multiple means of mitigating that issue. Yes, we use a very unique method of things, for example, called our consumption candles, and we have the ability for our automated, for the software to show us when the dynamics are changing. All of this stuff combined is, I guess by definition, in an attempt to address exactly what you're asking, to minimize the losses, right, the being wrong, the zones breaking and so on, and to amplify the ones that are right. Yeah, so that is the idea. Yes, the simple answer is yes. Yeah, hopefully that helps. You have some good questions, by the way, very good questions. You're very welcome. Like I said, I'm here. I'll stick around, but it looks like I've gotten most of the, well, I've gotten all the questions, I think, answered. Unless there are more, folks, I will carry on and let you do so as well. I really don't like to leave if there's still remaining questions. So I'll give it about, maybe 15, 20 seconds, and then if there's nothing else, I'll bid you a very good afternoon. or night or morning, depending on where you are in the world. Excellent, guys and gals, and you're very welcome. Thank you for that comment, pushing it in, brother. Thank you so much, and I hope you have a great day as well. Same for all of you folks. Have a wonderful one. Today being Monday, looking forward to tomorrow's live session, and then through the week and all that. Hopefully we'll find some really good setups this week. I'm really hoping for it. It looks to me like we're going to have them pretty soon, so I'm very excited. God bless you all. We'll see you soon.